Joint Ventures Part 2 Practical Problem on Joint Ventures, where books are maintained separately by the parties. Dear students, today let us learn about how to write up accounts in the books of the parties to joint venture where books are kept separately. Illustration: Sardar and Sons bought goods of the value of rupees 7,500 and consigned them to Thacker and Company to be sold by them on a joint venture, profits being divided in 2/3 and 1/3. They also paid 550 rupees for freight and insurance and cartage and drew on Thacker and Company for rupees 3,000 on account. The bill was discounted by Sardar and Sons for rupees 2,900. Thacker and Company paid 300 rupees for dock dues, storage rent, etc. The sales realized 12,500 rupees and the sales expenses rupees 250 were defrayed by Thacker and Company. The latter forwarded a sight draft for the balance due to Sardar and Sons after charging their sales commission at 5% on the gross proceeds. Write up the accounts in the books of both the parties. No interest need to be brought into account. Solution: Ledger accounts in the books of Sardar and Sons. In the books of Sardar and Sons, joint venture account with Thacker and Company. On the debit side, to bank cost of goods 7,500 rupees. To bank freight and insurance etc. paid by Sardar and Sons 550 rupees. To bank discount on bills receivable 100 rupees. To Thacker and Company dock dues and rent 300 rupees. To Thacker and Company sale expenses 250. To commission 625 rupees. To profit and loss account 2/3 share 2,116.67. To Thacker and Company 1/3 share of profits 1058.33. Total sale profits by Thacker and Company sale profits 12,500. The calculation of profit 2/3 and 1/3 profits to Sardar and Company and to Thacker and Company respectively is given. Sale profits 12,500, less expenses, cost of goods 7,500, freight insurance 550, discount on bills receivable 100, total expenses Sardar and Sons 8,150, balance 4,350, less Thacker and Company expenses, dock dues and storage rent 300, sale expenses 250, commission 5% on 12,500 625, total to be credited to Thacker and Company 1,175, total profits on the joint venture 3,175. Therefore, 2/3 share in Sardar and Company 2,116.67, 1/3 share to Thacker and Company 1058.33, total 3,175. In the books of Sardar and Sons, Thacker and Company, on the debit side, to joint venture account sale proceeds 12,500. On the credit side, by bills receivable 3,000. By joint venture account dock dues and rent 300. By joint venture account sales expenses 250. By joint venture account commission 625. And by joint venture account 1/3 share 1058.33. By bank draft, site draft balance amount 7,266.67. Ledger accounts in the books of Thacker and Company. Joint venture account with Sardar and Sons. On the debit side, to Sardar and Sons cost of goods 7,500. To Sardar and Sons freight and insurance 550. To Sardar and Sons discount on bills receivable 100. To bank dues, dock dues, storage rent 300. To bank sales expenses 250. To commission 625. To profit and loss account 1/3 share 1058.33. To Sardar and Sons 2/3 share of profits 2,116.67. On the credit side, by bank sale proceeds 12,500. And in the books of Thacker and Company, Sardar and Sons account. On the debit side, to bills payable account 3,000. To bank account draft balancing figure. On the credit side, by joint venture account cost of goods 7,500. By joint venture account freight and insurance 550. By discount on bills receivable 100. By joint venture account 2/3 share of profit 2,116.67. This is how the ledger accounts will appear in both the parties. In the next lecture, we will solve a practical problem on joint ventures where joint bank account is maintained by the parties.